Hello. Steelmakers are scrambling, scrap prices are creeping, and one wrong bet this week could wipe out your quarterly margins. Buckle up because the July market just threw us a curveball nobody saw coming. I am Osama Nadeem from Better Deals, Pakistan, and the trading desk that calls the markets before your WhatsApp group even wakes up. Today, we will break down the latest numbers, expose the inefficiencies killing your spreads, and give you laser focused game plan for the next 4 weeks. Stick around until the end. We are dropping an outlook model you can plug straight into your bids. First, we will talk about the price pulse. What we saw in last week, the scrap prices have been pretty stable. The prices are gradually moving up. It is rebounding. The North European HMS scrap price in Turkey just printed around $336.5 CFR, up $1.36. US cargoes were also being sold at a premium of like $7 and now trading at $343.5 per ton. If we talk about UK shred, it is also stable, and the FOB prices in UK were around $318 per ton. And well, now we talk about the raw materials. Iron ore had been pretty stable last week, but now it has come down by $1, and it's now trading at $95.70. With slight downward adjustment. And if we talk about coking coal, it is being traded at $180 per ton, which is also a little lower as compared to the last week. We think that the prices are not going in line. The iron ore prices and scrap prices are not in line, and that gap is becoming very much disturbed. If we talk about its relevancy and the correlation, that has been disturbed. Now, I'd like to talk about the freights, which are a new concern for all the shareholders in the market. Before that, I would like to share that Turkey has booked like 6 cargoes, and last week in July, which is for the August shipment. Basically, total Turkey has to book around 25 to 30 cargoes, out of which they have booked a few cargoes now. And the prices for the from UK HMS 8020 was 335 levels, Baltic 343 levels, as well as from US it was 345 levels for the HMS 8020. And if we talk about the forward pricing, that looks like it has been creeping. It will be creeping up as we move forward. If you look at the LME and the forward pricing, we are looking at $349.50 very soon, and the September is showing $350.5, which means that most of the market participants have such psyche that they are convinced that market would go up in the next upcoming month. The main concern for me would be that the freight cost is going to be higher next month or in next few weeks, not even only in containers but also in the bulk, which is going to hit the Turkish prices very badly. And we would be looking at a hike of around $5 per ton at least, if we are talking about the Turkish business from Europe and from US. Now we would like to talk about Asian markets. The Asia market has been pretty jeopardized last week because people are not certain that what's going to happen in the next meeting. But if we talk about billets, the billet prices were up. It was increased by around $5 per ton, but it was not very well accepted by the customers, and customers are negotiating on the pricing at time being. And if we talk about the Chinese market demand, that has not been there because there is summer season business from Europe and from US. Carbon issue, the carbon emission issue has also been a major issue, and in Turkey there is a new system coming in where they would be tracking the carbon emissions. Very soon, next few years, they are going to implement these things, and that is also going to affect the costing, which means the Turkish mills will have to consume more of the scrap to keep the emissions in control. Without that, they won't be able to compete. And if we talk about the financial impact of this new carbon emission systems, we expect that it would be around $2 to $3 per ton of the we discuss about in the terms of carbon emissions. Every 10 kg carbon dioxide emission would be attracting $1.2 per ton of the extra cost, which the customers will have to embed, and also the scrap yards would be in a better position to sell off their scraps at better pricing because the Turkey will have to consume the scrap in a better ratio actually. Now I'll come to the part where we will give you and share with you the better deals outlook about the market, which is a very important segment of this video. And if I talk about the deep sea market, HMS markets, I think it is going to be bullish in next 2 weeks, because the major reason is that the Turkey has not bought that much cargoes which they required. Even in June, the booking was not up to the mark, so they had some shortfall from June, and now in July they have to cover that up. They have to buy at least 25 to 30 cargoes, which they have already started booking, and the price levels what they have to pay, it is already higher as compared to last week. They paid $2 higher this week, and I expect that they will have to pay more further as we move forward. And my expectation is that Turkish market could touch in next 2 weeks, it could touch like 355 to 365 levels for HMS, which would be around $10 higher from the market where we stand today. The basic background working behind that is that almost the carbon emission thing, $2-3. I would like to give a $2-3 a weightage for that carbon emission thing. $5 freight increase is there. Everybody expecting that $5 per ton increase would be there. After that, the Turkish buying, this buying which they have to cover up, because they have to cover up their shortfalls from the past, from June bookings, they will have to pay another $3 to $5 more to the scrap yards. So all together it would be like 355 to 365 levels for the HMS. That is the background working. And if we talk about the short sea market, it would be around 320 to 330 is the short sea market. It will remain stable. They will keep on supplying because they have limited options. They will keep on supplying to Turkey at these numbers. If I talk about the Asian billets is actually being very shaky and choppy, because until we have a final decision from the Beijing about the production cuts and things and the policies, until then we can't say anything with certainty what is going to happen, but hopefully it will remain range bound. If we talk about the iron ore, it has been range bound pretty recently. We are seeing in last 2 months it has been moving in one range. I still expect moving forward it will be moving within the range, and we will see what the Chinese policies say, and then we will have more clarity about it. So this is all about the market outlook from Beredee's side. And if we discuss about the actions, what you should do in current situation, I would expect and I would recommend that we should be booking our scraps for July, August. Now is the time we should be booking before Turkish customers enter the market and they start buying their cargoes, which might affect the pricing, and the price may go up a little. Before that, we should be actually going into the market and procure our open positions, and we should cover those positions. It's not a market where you would wait for the prices to go down, because there are more chances of prices to go up in coming season soon. So this is it from my side. Thank you very much for watching the video.